Hey guys, this is John from My Crypto Paradise, and today we're going to take a look at Bitcoin US dollar. Just having a look here. We'll be starting off at the weekly, and we're drilling down from top to the top down, from the higher time frames to the lower ones. You'll get a good understanding of some concepts of how to chart this cryptocurrency and how to take trades in future. I'll like I said, starting off on the weekly time frame, we can see here that we've got these two big red lines. I'll just draw in a triangle for you to see it in the short term. So as you can see there, make it in purple, that's our symmetrical triangle. This is a neutral pattern. It's not bullish or bearish, and we'll be looking at this in the long term. So we can see as we move towards the resistance that we've got this line here, and it's currently moving in an uptrend on the lower time frames, but we'll move down quite quickly from here. That's all we need to see on the weekly, just to know that there is some resistance nearby, and if it does manage to break out from that, then it could push a lot higher. All right, so I'll just remove this triangle, and we'll go down to our daily time frames. Okay, so as you can see, I've drawn these two parallel lines, descending parallel channel, and this is what the price is being contained in at the moment. We can see that it's been tested on numerous occasions and been respected, and just recently we've had a pop. We've had a pop through the line, through, and this is called our breakout candle. We do not trade this breakout candle. You can, depending on your risk appetite. The more conservative people will wait for the break and wait for the next candle to exceed past that break point. That depends on the strategy that you're taking. On the lower time frames, which we'll go down to now, I'll show you that this trade should already have been taken. Let's have a look. So we'll just go down to we'll come back to the daily, go down to the 4-hour chart. As you can see here, we were in this yellow box as a consolidation area, and we've had a breakout candle on the 4 hours, and then the next candle has confirmed the breakout candle. This tells us that the trade should have been taken at 8,496-ish, and this trade should be active at this moment. It's still probably not too late to enter on the 4-hour chart, and your stop would probably be sitting at about 8,436. That's when you want to exit the trade, because it's no longer viable to be in it. Also, you could let it drop down to test, but of course you're risking more. So it all depends on your risk appetite and how much of your main account that you're risking. Generally, you don't want to be risking more than 2%. If you are, you're a high risk trader. Okay, so I'll just, while we're going down the time frames, we'll just drill down to the 1 hour. Let's have a look. Okay, so again, this is why, depending on your time frame and your risk appetite and how much you want to sit in front of the PC, it depends on your trading strategy. On the 1 hour, we had the breakout candle. The breakout was confirmed. You could have entered at 8,333, and you would have been riding this all the way up, boom, 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 and you'd be making a tidy profit. Let's have a look how much you'd be up if you did enter. You would be up about 3%, 2 to 3%. This is on the hourly chart. Not bad to make 2% on, say, a 10 grand trade. That would equal a snappy $200. Not bad for an hour's work. Some people go to work all day for that. All right, so there's our chart. As I spoke with, it was a consolidation area on the 1 hour. We've broken out to the top, and it's active. This should be an active long trade. Let's go back up to our daily. This is a more conservative outlook. As I said, downtrending channel. However, now we've broken out. As you can see up here, it's done that in the past on this particular channel on a number of occasions. So depending on what this candle does is what you should do tomorrow based on this. Let's see if there's a retrace. What I can do is I can clone this line, put that right there, and maybe there, and say that will be our soft resistance. And as you can see, that's where it's sitting. Funny how charts work, isn't it? And that's where it's finding that resistance at the moment. Let's see how it goes. If it can get to if the next candle would definitely be an entry candle, because we've had a different consolidation on the daily. Let's look at some tools while we're at it. I'm going to look at the Fibonacci retracement. Very good tool, very powerful. Top to the bottom. This is the bottom here. I'll just move it out so that we can read it a little easier. And we can see that we had a retracement. Went down and we've retraced to the 23.6, and it's tended to struggle there for a little bit. I know it looks a bit funny with a black screen, but you can see that it struggled at that point. And once it did break out, it just ran. So let's see what it does with the next candle. But in all likelihood, most retracements and a general rule of thumb is that the price will always retrace to between 38.2 and 61.8, and it tends to pause around the 50%. So we could see a move go up, down, up to the 50%, pause for a little bit, push up to the 61.8, and then from there that may top out. You'll reanalyze the chart, you'll look at the candles, you'll look at the volume, you'll see that people are trying to get out of the markets, and you would act accordingly. All right, so we've gone through fib retracements. Next I'm going to look at is our Gann fan. This is a tool that not many people are familiar with. Top to bottom. I'll just make that a little bit more visible. And as you can see, that line has been respected here and here and here. All likelihood we've seen this breakout, and if it does continue, it might go to our long-term weekly symmetrical triangle, and we'll watch that. We'll watch for that, and it could go up to the 90.90. $9,090 could be our next level of resistance. Let's have a look, see if there's any other points of interest on this chart. There isn't. Let's remove this scan fan. And what I'll do is I'll draw some resistance lines in, level resistance and support lines. Let's choose a color of white. And I'll probably put one here. And you can see that that line has acted as a resistance here. Probably find another one. I'll clone this one, put it here. This looks like another point. It may, and yes, it is. So that level, which is 9,062, has acted as a support. Support was broken, confirmed, pushed back through, acted as a support again, and it might act as a resistance. So 9062 to 9090 is where I would anticipate the price to be moving in the short term. I don't like to anticipate, and when you do take your trades, make sure you put your stop losses in. There's no gaps in this chart to mention. There's no real candle patterns that I can identify. We've got our risk reward. Let's throw a long position here where we could have entered. Where we'll put our stop, probably put our stop here, and we'll see that the ratio is a 1-to-1. Not the greatest, however, you can probably risk less money, and you can have a 1 to 1.5 risk reward ratio. And if you did want to let it run to that top resistance line, you'll have a 2-to-1. That's not bad, and one that you should let run if you do decide to pull your stop in that short. Okay, that's all we've got for now. We've had a look at the weekly, the daily, the 4-hour and 1 hour. And I'll leave you with it. Happy trading, good luck, and see you next time.